Trading and investing are two different ways people try to grow their money, and understanding the fundamentals is the first step to making safe and smart decisions. Trading usually means buying and selling assets like stocks or currencies within a short time. Traders look for price movements and try to predict whether something will go up or down. This can be risky because prices change quickly and no one can guarantee profits. Investing, on the other hand, is more long-term. Investors focus on the overall growth of companies or markets over months or years. Instead of reacting to daily price changes, they choose assets they believe will become more valuable in the future. One of the most important fundamentals in both trading and investing is research. Before putting money anywhere, you need to understand what the company does, how it earns profit, and what risks exist. Another key concept is diversification, which means not putting all your money in one place. When you spread investments across different areas, you reduce the impact of one bad decision. Safety in investing also comes from setting clear goals. Ask yourself, am I saving for education, for experience, or to learn how financial systems work? When you have a goal, you are less likely to make emotional or rushed decisions. Risk management is another essential part of the process. This includes never using money you cannot afford to lose and avoiding complicated strategies you do not fully understand. For younger learners, the safest way to explore financial topics is through virtual simulations, educational platforms, and guidance from trusted adults. Remember, the goal when starting out is to build knowledge, not to chase fast profits. The more you study charts, company reports, and market behavior, the better decisions you can make in the future. Trading and investing aren't about luck, they are about patience, discipline, and understanding the world of finance step by step. Subscribe my channel Money AI Tech.